How would you like to get paid to invest? I find this amazing. Well, believe it or not, it's getting closer to reality. That's right, Soft Financial's low true beta ETF is finally active, paying investors to buy in for its first 100 million, and it just got clearance from the SEC to officially get its incentive program going. Alfred, this is your baby. Break it down for us. We talked about this a few months ago, but you're going to be paying people to hold your ETF. How does this work?
Yeah, essentially, we're going to waive the 29 basis point fee for the fund, and the advisor will be contributing 5 basis points to the fund, essentially paying the end holder of the fund.
And this is a low volatility fund. Describe what's in there. Was it like the minimum volatility funds we were just talking about?
It's similar. It's actually outperforming it today a little bit, so I'm kind of happy about that. The fund is focused on low volatility stocks. It's a 100 stock basket, equally weighted, sector cap, so you're not making a particularly sector bet. And it's rebalanced quarterly. It is using our technology, True Beta, which is what we believe to be a more accurate measure of market risk. So when you're looking for risk-off days like today, you want to be in a fund like this because it gives you some downward protection.
And what's the bet here? Obviously, It sounds like financial suicide, but you're making a bet what? That you're going to attract enough assets under management so that the fund will essentially take off after that first year?
Sure. It's very similar to a lot of industries where you will have a newcomer offer an incentive to attract new customers to get attention. But one of the second, and really the biggest reason we're doing this is these arbitrary hurdles to get on broker platforms. So imagine you've got this amazing organic bread, but you can't sell it in Whole Foods because there's no shelf space. So no matter how good it is, you can't sell it. So we're trying to attract attention. We also believe investors are going to stay put because of the value and the differentiation of the product.
Jim, you're a veteran of the fee wars. You've been around since the very beginning. We call it the race to zero. Is there a bottom here, and what happens when everything kind of goes to zero eventually? Who survives in this?
Well, so zero is tough. I'm not going to kid you, and paying people is even harder. Yeah. So from that perspective, but I do think, listen, investors want to look for long-term value. And I get that the expense ratio is the one thing they can see. They need to look at the whole total picture. That's what I worry about, Bob. And this isn't new for me. This isn't just because we're talking about liquidity today. We talk about total cost of ownership. I've been talking about it for 10 years, probably 15 years. A lot of different folks are asking about it today. I'm like, it's really important. I think it's interesting. You can come up with different ideas to come into the market, waivers and stuff like that. But it's really about what's the right long-term investment for the investor.
Is there any future to this, to negative
Well, I think
returns?
there is. I mean, we're going to hit a certain level of ETFs. We're maybe 2,200 right now, but 500 are opening, we're 500 are closing every year. It's a unique way, and as Alfred said, it's really important to get on the platforms. If this can get you up to that critical level, $100 million, all of a sudden you're going to be on the Morgan Stanleys and the Schwabs of the world.
And the symbol LSTR, is that right?
LSLT.
Excuse me, LSLT.